Sounds good. So I'll just introduce you, I guess. So this is Mitch from My Condo Source. And Mitch is an expert in pre-construction real estate. He's been doing this for a really long time. And he's got a great presentation here with a little bit of education and tips on how to sell pre-construction real estate, as well as three opportunities that you guys can get right into right away and sell to your clients. So Mitch, without further ado, if you want to take it away.
Perfect. Thanks, Kyle. I appreciate the nice introduction. It's nice to finally work with you guys. I'm glad that we got in touch. So let's just jump right into it. I know everybody's time is super important. I'm going to be jumping into a PowerPoint presentation, but the premise of today's Zoom and today's call is really to get the agents more involved in pre-construction. I mean, it's something that everybody talks about, that everybody's so hyped about, but it's not taught in our real estate courses. And it's sort of this completely different niche that unless you're actively involved in it, you have an idea of what's going on, but it's sort of this like mystery of the industry. So I'm hoping to shed some light on the mystery, and then we're going to get into what the process I go through when I'm looking at a development site is, and then a little bit about who I am. And then we're going to give you guys 3 opportunities to start selling and getting involved with today. So I'm excited. I hope that you're excited. I know Kyle's excited. So I'm going to share my screen. Oh, I think you just have to enable me to share my screen there, Kyle.
Oh, yeah. 1 second. There you go. I've changed your host.
Awesome. Thank you. Okay, so let's share the screen there. That's your application. Let's go right to the beginning. And you're good. You can see that there, Kyle?
Yeah, I can see it perfectly.
All right, sounds good. And you're not seeing the side slides, right? You're just seeing the main slide?
Still seeing the side. I think you have to.
Okay, so hold on 1 second here. There we go.
Perfect, yeah.
Perfect. Okay, so like I mentioned, today's topic is how to successfully sell pre-construction condos, and then a few great opportunities that you guys can start promoting today.
Great.
Who am I? Kyle gave you a quick little introduction of who I am. For those of you I haven't met yet, I hope to meet you at some point soon. My name is Mitch Parker, and I've been active in real estate for the last 15 years. I originally started as an investor purchasing rental properties and pre-construction condos many, many years ago. And it just made sense to get my license so that I had access to be able to purchase the properties and find out about them before the general public. And on this note, I really encourage all of you watching today to build your own portfolios. You know, real estate doesn't really have a set retirement fund. And so we have access to this unbelievable ability to build wealth through real estate properties. And so I'd encourage all of you to buy property for yourself. And it's amazing when you build it over time in a number of years, what it really all accumulates to at the end of the day. Really, it's buying your freedom back. So I am a real estate broker. I've been licensed for the last 14 years. And I have been on every side of the industry. So I started on the client side doing resale many, many years ago. I've done leases. I've sold churches before. I've sold condos. I've sold houses. So I have a very, very good overview of the industry. A number of years ago, I had a chance to go in-house with a developer that was putting a project together in Ottawa that we actually ended up selling from Toronto. And so I ran all of their marketing, all of their sales, all of their operations. And then from there, I transitioned into a company called Hirsch Realty Group, which is a sales and marketing company that developers hire to essentially put their marketing together for an entire development and sell it out. So with that, we've done some really cool stuff. I know Kyle's been involved with some of the things we've done. We put agents on private helicopters and flew them from downtown over Scarborough. We've turned offices into 3D immersive studios, like kind of like a Van Gogh immersive experience. We've done some other really, really cool stuff. We sold, 200 units in a day, 300 units in a day. So really, really interesting side of the industry. And now my latest venture, this is where I come in today, is really getting agents more involved in the pre-construction field through a company that I'm now working with called My Condo Source. And so My Condo Source, the founder is Seher Mahmood. I'm sure a lot of you know her name from the industry. Currently, oh, I went too fast. There you go. Currently, the company My Condo Source has sold more than 2,000 condos. Last year alone, moved 450. 99% of the business is pre-construction. This is the niche that we work in. It's the niche that we understand better than anybody else. And that's really the only way to have this level of success in the industry. Essentially, we're a platinum pre-construction team. So we're the top 1% in Canada. And for those of you who maybe are new to this and don't know what that means, we are essentially a go-to source for builders to sell their developments. And as such, we get first access, we get the best incentives, and we have great relationships with these builders. And so it enables us to get, better units and special favors down the road and things that we may need that come up later in the agreement of purchase and sale date and closer to closing, things like that. So basically today, the goal is for you guys to have access to both myself and then all of the benefits of My Condo Source. So you're really going to be able to leverage the brand and leverage our relationships to help both yourself and to help your clients as well.
Great.
Yeah. So why pre-construction? I mean, again, we all read the articles, we all see the hype, we've seen people lined up overnight, but really what is it about and where's the opportunity? So there's great investment opportunities for your clients in pre-construction specifically. It's a very, very good way to diversify a portfolio for a lot of clients. Condos are really the final frontier of affordable housing. We've all seen just how expensive real estate has gotten in not only Toronto, but really the GTA. And so, being able to offer your clients an alternative that's, not $1.5 million, not $2 million is a really, really nice thing to be able to do and a great way to generate a number of sales. Pre-construction is a very passive investment strategy. So, when you think about it, you're signing an agreement of purchase and sale, you're giving some deposit checks, and then there's really nothing to do for the next 4 years, 5 years, 6 years, depending on the length of the development and the build out of it. So very, very passive in nature, very different than buying a resale condo, putting a tenant in, being an active landlord, or you as an agent, if you're doing property management, to be involved like that. So you sort of buy it, you set it, and you forget about it. The other nice thing about pre-construction is there's multiple exit options. So when I say that, what I mean is you could go the traditional route, you could close the condo, put a tenant in and utilize it like a normal rental property, or there's always the option, or most of the time I should say, the option to assign the condo, which is essentially selling the agreement of purchase and sale to a new purchaser who then takes over the original buyer's obligations to close the unit. Now, normally the purpose of that is to generate profit. And if you've been reading the headlines lately, you'll see that assignments are one of the things that are targeted by the government of Canada in their latest budget and rule changes. We're going to dive into that in a few slides down, but something that you should definitely be aware of. The other really nice thing about pre-construction is you get to space out your deposits over time. Generally, there's a deposit structure that, because on resale, if you're buying an investment, it's 20% down right away. With pre-construction, you're spacing it out over time. You also don't have to qualify for a mortgage right away. You have to pre-qualify for one. I mean, anybody who works with our group, we can take care of that for you very, very easily. It's one of the services that we offer, but you don't need to come up with a firm approval until final closing 4 years down the road. And last, but definitely not least, almost more importantly, is you're actually able to buy into future growth. So, if you're buying a resale condo, in a lot of ways, you're buying not only the condo, but you're buying the community that it's surrounded in, right? Whatever the vibe is, whatever the feel is in that neighborhood and the reputation of that neighborhood, that's going to be tied to your condo and ultimately who's going to lease the condo, how much you can get for it down the road. Whereas with pre-construction, if you buy strategically and you buy smart, which we're going to get into, you actually have the ability to get in early on the ground floor in a lot of these neighborhoods. And by the time the buildings are done, they've transitioned into what's become an unbelievable neighborhood, and at the same time appreciated into an unbelievable profit at the end of the day. So why is now a great time to do it? I always tell people when I'm talking to clients, when I'm talking to agents and educating people just like this, there are always pushing and pulling variables that influence the market. So pulling variables are ones that are pulling prices back to lower prices, and pushing variables are ones that are pushing the prices higher. And so right now, we are actually in a very push dominant market. And we're going to break down each one of these as soon as we want to go. Let's see, can we go back one? There we go. Okay, so it's a great time because we're in a push dominant market. Another very, very interesting thing that I hope all of you know at this point, because it's been all over the headlines, is right now there's a record price gap between the average price of a house and the average price of a condo. It's over $1 million at the moment. This is the first time in history it's crossed that $1 million threshold. And the important thing to know about this price gap is historically, it just runs on cycles. Basically, the price gap between condos and houses closes over time, and then it opens over time, and it closes, and then it opens. And the cycle just repeats itself. And the reason why it does that is because everybody's ultimate goal is always to buy a single family home. That's always what's been tied to success. And it's what's always like, I made it. I bought a single family detached house. Whereas the position that we're currently in the GTA market is many, many people cannot afford single family homes. That's just the reality of Toronto and the greater Toronto area right now. And so what happens is as people buy single family homes, the demand increases greatly. We only have so much supply in the market, so the pricing goes up over time to the point where less people can afford to get into the market, and that demand that was originally in housing shifts over to the condo market and ultimately drives up the prices of condos because we can't supply the market with enough condos. And so if I'm looking at the trend of the next decade in the GTA, it's really going to be the closing of that price gap between houses and condos. And the price gap doesn't close because house prices come down. It closes because the price of condos goes up. And if you've been in real estate long enough, you'll have seen this cycle over time because it just repeats itself over and over again. So this really is the decade of condos. You're going to see that. You think it's expensive now, just wait a decade from now. All your clients who buy one, they're going to wish they bought two or three. And I'm sure, Kyle, you would agree with me on that one.
Absolutely. Yep. That cycle is really important. That's a good thing to note.
And so the final point here is Ontario really is one of the best places in the world to buy a pre-construction condo. I know that it's difficult for us a lot of times because we're submersed in this market. It's all that we really know and that we learn. But when you look at what's implemented here to protect the purchasers, it's unbelievable. I mean, we have Tarion here who provides deposit insurance on deposit down payments. We have very, very strict building codes that people have to adhere to. Every builder within the categories have to be approved by Tarion. So you're not getting any just random people that are building. You also have in high rise, all condo deposits are protected because they're held in a lawyer's trust account and the builder doesn't actually have access to it. We also have warranties on all of our new construction, whether it's 1, 2, 5 or 7 year warranties on it. So these are things that don't exist in most of the world. I think a lot of people here just take it for granted that we have it, but all these items really make Ontario one of the best places to buy a pre-construction condo. I would say anywhere in the world. I mean, I just don't see this level of protection in other markets.
Right. And also to note on that is TREB is the largest real estate board in the world too. So when you go to resale after you close on it, there's a huge real estate resale market as well.
Yeah, that's a fantastic point as well. So yeah, and you know, the current market opportunities, I think right now, just where Toronto's poised to go, you know, 5 years ago or 10 years ago, if you were on vacation and somewhere tropical and exotic and someone asked you where you were from and you said Toronto, they may or may not have known where you were from. You know, you generally had to say Canada. And so I think nowadays when you say you're from Toronto, we're on the map. Everybody knows where Toronto is, regardless of where you travel in the world. And so is Toronto more expensive compared to where it was 5 years ago? Absolutely. But you have to zoom out and you have to look at where Toronto sits on the global stage right now. You know, we're the Canadian equivalent of New York, of London, of Hong Kong. Those are probably the three closest cities. And we're very, very cheap compared to those places. And, you know, our rental yields are better in terms of our prices. You know, Canada's an unbelievable place to live in terms of safety, in terms of security, government stability. Our currency is very stable. I think we saw over COVID that it became a little bit less like the American dream and a little bit more the Canadian dream. And so it's like an unbelievable place to live, and it's going to continue on that way. There's a number of other variables that we're going to get into as well. But I think it's important when you're talking to clients, you have to paint a picture of why now really is a great opportunity. Because if we remember, there's always going to be variables that are pulling the market back in prices. And if your clients are focused on that, they're never going to buy and they're going to miss unbelievable appreciation.
Right.
So, you know, we talk about some of those pulling variables. The biggest one in the headline right now is interest rates. Everyone's talking about interest rates going up. They're supposed to go up again in June. If you actually look at where interest rates are, we are virtually the equivalent to where we were before we went into COVID. So just 2 years ago, we saw a number of rate drops during COVID. There was 4 rate drops, and now we've seen a few rate increases. And so, you know, while they dominate the headlines, the reality is we're sitting exactly where we were about 2.5 years ago, 2 years ago. And, you know, interest rates are one of the variables that the government uses to control inflation, which has to come back because currently right now it sits at about triple what the overnight rate is projected to be of what the government, the Bank of Canada wants it to be. And so raising interest rates is one method that they use to essentially slow consumer spending, to increase people's savings as opposed to spending. And also because the cost of borrowing goes up, less people borrow money and leverage themselves. But when you look at what's causing the inflation, a lot of it has to do with supply chain issues. You know, we saw it with lumber when COVID first happened. We've seen it in metal. We saw it in computer chips is one of the best examples, you know, where cars just were finished on the assembly line, except for they couldn't have these chips in there. So they kind of sat in this parking lot for months and months. A lot of these supply chain issues are expected to be remedied by the end of 2022, early 2023. So as these things get back into check, inflation is naturally going to start to decrease and go down. And are we going to see more interest rate hikes? We definitely are. Another one's expected for June. They're expecting a 0.5 point hike. You know, there'll probably be some hikes after that as well. But remember that we're in an environment right now where interest rates are virtually at an all-time low. Money's amazingly cheap right now. And so, you know, these small changes in interest rate are not greatly going to affect the market, especially because Canadian households have record high consumer debt. So you just can't arbitrarily raise the interest rates up on people. The other thing is, remember that CMHC is a government organization and they back billions and billions of dollars of mortgages in Canada. So it's in no one's best interest to raise interest rates through the roof and all of a sudden have all of these defaults. We just wouldn't be able to do it as a country. So while I believe there'll be some changes in interest rates, I don't believe that it's going to be significant enough to really slow down the market. Kyle, what are your thoughts on interest rates? I know you're involved in this stuff.
Yeah, I pretty much agree with you. If they raise them too quickly and too fast, where it starts to cause too many problems in the economy, I think they'll just kind of reverse course for until they can get it back on track. So it's going to be a very delicate balance. So I agree with basically what you said.
Okay, awesome. The other thing is the foreign buyer ban. So this was one of the changes that just came into place. It was basically a person who wants to buy real estate but does not live here. They cannot buy for a period of 2 years. Now, the really interesting thing about this is over COVID, we didn't let any foreign people into the market, right? And so we saw one of the hottest markets absolutely on record. And so when they actually dove into the stats, they came up with a number of 3.7% of all transactions are currently done by foreign buyers. And it's very hard to establish the consistency and the accuracy of that because they don't really track the metric. But even if we round it up to 5%, it's such a small number of overall transactions. I don't personally foresee it affecting anything in these changes. I think the other main headline item, which is the double taxation on assignments. And if you're not familiar with this, basically, this is a rule that was actually already in place. The difference being, you could assign, before this rule came in, you could assign a unit, meaning you could sell it before it was actually registered to somebody else. We talked about it a few minutes ago. But if you claim that your intention was to move into that property, then you would not have to pay HST on it. You would basically pay your capital gains and you'd call it a day. Because intention is a very gray area, the government closed the loophole. And what now occurs is everybody falls under the umbrella of paying HST on the profit. So if you're buying for 500,000, selling for 700,000, and let's say you put 10% down, so let's say you put $50,000 down, you have to pay HST on the profit of 200,000. You also have to pay HST on the deposits for 50,000, which I know is very confusing because you're going like, why would I pay HST on deposits when that's after tax money? No one really understands this. The government's actually lost a few cases in court about this already, but they actually are continuing to aggressively go after this. Remember, HST on condos is an unbelievable revenue source for the government, and they've missed out on this for years and years now. So I think they're trying to make up for it. And then what happens is, so you have your net profit on your investment once you assign it. You pay the HST on the profit, you pay the HST on your deposits, and then you pay capital gains on the rest. So again, it's a variable that's pulling the market back and cooling it off a little bit. I've ran some numbers, and even after paying all the taxes, it's still a much better return than you would have gotten in the stock market or with a mutual fund or many other investment vehicles for years and years and years. So, real estate, despite all these things, it's still a very attractive investment. And Kyle, are you seeing any like effect with these new rules that have come into place?
Not so far. Nothing so far. I think they're still trying to implement it everywhere. So we'll see what happens. But
yeah,
the rate of everything increasing and inflation's pretty high, and basically the best hedge against it for the average person is real estate. So it's not going to change the fact that real estate's basically one of the best investments out there.
Exactly. Yeah, I couldn't agree with that more. And so flipping to the other side, because remember, there's variables that are pulling the market back, but there's also variables that are pushing the market forward. And in this calculation, by the way, works in any market. Like you can go anywhere in the world and look at what's going on, and you can weigh the pulls versus the pushes and generally see the trend that market's going to go towards long term. So in Toronto and the GTA specifically, things that are pushing the market upward. So immigration. Canada came up with a goal of allowing 1.2 million new Canadians into the country over a 3-year period. That number is actually 1.9 million Canadians are currently in the queue going through the immigration process at the moment. So you have almost 2 million Canadians. And when you look at the stats, 55% of them are expected to settle into the GTA. So you have about 1 million people that are going to settle into the GTA that are new Canadians. And these are people that are coming, that are educated, they come with capital, they come with families, they take jobs. So these are very, very good people that you want to bring into your country to help drive your economy. Plus, they need housing, which ties into the supply and the demand. We've all seen the headlines. You know, one of the biggest issues, I'd probably say this might be the biggest issue in Toronto and the GTA, is the fact that we just can't build fast enough. So, you know, from the demand side, there's tons of it. But from the supply side, we can only generally output about 25,000 units a year. You know, some years have been a bit higher, some years have been a bit lower, but around that 25K. Conservatively, we need about 50,000 more units to come per year for at least a decade if we were to rebalance the supply and demand. The problem is, geographically, we can't sprawl out more because we're confined by the lake to the south, by the Greenbelt to the north, and by cities to the east and the west. So we can't really sprawl out more. And we don't have the trades to do that expansion either. So, you know, even if we had the room, we couldn't build it fast enough. We don't have the trades to be able to do it. And so this is an issue the government has toyed with and tinkered with for years and years and years. And I'm of the belief that ultimately what's going to happen is at some point, you know, you're going to get pricing going up and up and up. And, you know, the demand, it's eventually going to reach a nexus, because that's what economics teaches us. At a certain price, you know, the demand will start to wane off and your supply and demand will cross. And that's where equilibrium is reached. But I believe we're very, very far off from that point. I think there's a lot of growth. And we see that with other real estate markets. I mean, you know, we talked about the expensive real estate markets here. I'm sure if you would go back and read the, you know, newspapers from New York City, they've probably been talking about affordability for the last 20 years. I would guess Hong Kong, probably the last 30 years, 40 years, right? I just saw there was like a parking spot in Hong Kong that sold for $1 million. So, you know, you talk about affordability, we're just like very localized here because we're consumed by the Toronto real estate market. But as soon as you go outside, what you realize is there's so much more run room in this market here. The other thing that a lot of people don't know about is called inclusionary zoning. So this is something that the city is implementing, and it's through Toronto specifically, and there's different zones through the city. Now, inclusionary zoning basically is saying a certain percentage of new buildings that are launched after November have to have affordable housing incorporated into them. This is not low income housing, just to be very clear. There's a metric of it's average rents over a number of years, and your income cannot be higher than that certain amount. It's a big, long equation. But basically what it's saying is if you are a builder and you are building 100 units, up to 20% of them, so let's say 20 units out of the 100, have to be deemed as affordable housing. So if your average cost was, let's say, $1,500 a square foot, you could sell 80 of them at $1,500 a foot, but the other 20 have to be cheaper. And that amount hasn't been dictated yet, but basically assume that the developer is going to have to build those at cost or at a small loss. And because profit margins are already really tight in the development field, generally around 10% on a good development nowadays, you know, that loss in revenue is just going to get transferred into the other 80% that you're able to build at market. And so I think come November, we're expecting to see quite a large bump in price per square foot. And I actually think that this may be something that the city ultimately regrets doing, because I think it's going to bump prices up and make it even less affordable for people to get into the market. But if you aren't familiar with inclusionary zoning, it's definitely worth a Google. It's definitely worth reading, because it's something that's going to affect all of us come November. And it's something that's really enticing to talk about with your clients as to why they should buy now, as opposed to waiting to see what happens. Cost of development. The city just raised development charges by about 50% last week. So that's going to make it incredibly expensive to build. We've all seen the cost of material. We've all seen the cost of labor go up. Land costs have gone up. So developers can't sell for less at this point. They just can't. So, this is the new baseline in the GTA. It just feasibly isn't worth it for a developer to sell for less than this. And so to keep seeing development and to keep seeing growth, we need to keep expanding in price. And finally, the affordability. It's that affordability or the lack of affordability in houses. So where do people look? They look to condos. And if you're talking to your clients and they're looking for great insight, I would actually direct them to look at 2 and 3 bedroom condos. I think they're going to perform the best over the next decade. As less people can afford a house, as soon as they're priced out and they look to a condo, they're not going from like a 3 bedroom house to a 1 bedroom condo. They're going to be looking for that 2 or 3 bedroom to have a little bit more room. And so as the demand shifts into the condo market or continues to shift, we're going to see a nice uptick in prices from that statistic alone. So all these items really just give an indication of, are there some things that are pulling the market back? Yeah. Are interest rates making all the headlines? Sure. Latest government policy is what everybody's worried about and talking about. Sure. But then we look on the other side at what's really driving the market, and we can see that the variables here, in my opinion anyway, just lead me to believe that we're in this environment where condos are going to go up a tremendous amount in the next decade.
Yeah, I agree.
Yeah. And last but not least, global reputation. We talked about it a little bit. It's the Canadian dream. Everyone looks at Canada as this awesome place to live, great government, our jobs are great. We're one of the world leaders in tech, artificial intelligence. Geographically, is it a little cold in the winter? Sure. But we have really nice summers. And, people want to live here and they want to come here and build a life at the end of the day. So it's a big variable and factor that goes into all this. So those are all the reasons why. And I want you guys you're going to get a recording of this after. You'll have a recording of this after. So you can go through what I just said a few times and definitely make some notes, because this is really how to sell pre-construction. It's how to sell real estate. You guys, all the stats that I just talked about and Kyle and I have been going through, they're all reasons why our clients should be buying now. And you should be leveraging them to encourage them to buy, because they're going to build tremendous wealth. So, as soon as you talk to somebody and they're on board and they say yeah, let's find a condo or let's find, an opportunity. So how do you find a great development? What does it really look like? So the greatest indicators for price appreciation really comes down to 2. If there's only 2 things you look at, it's actually 3, but if you really focus on 2, you're looking at community growth. So what's going on in the neighborhood, what's planned in the neighborhood. Again, with pre-construction, the nice part is you're buying at today's market, but by the time it's ready, it's going to be tomorrow's market. So you really want to have a good understanding of what's going on and will be implemented by the time the building is done, so that it's going to work towards your appreciation. Proximity to mass transit. I mean, that's the other major variable. Studies over and over again have shown that if you're close to mass transit, that there's great money to be made. And then you have the other specific location influences. So for example, being close to water, being close to a shopping center, things like that, that really varies from site to site. And that's why I said there's really 2 major indicators, because you can take them uniformly across any market, any industry. And if you look at master plan and proximity to transit and transit expansion, then you'll always do well. So to give you an idea, these are master planned communities. This is Emerald City by Fairview. And what we've done here is we've taken the average appreciation of a standalone building on MLS and the average appreciation of the master plan community, and in the same MLS district. So really comparing apples to apples. And when we compare Emerald City, the first one, we've actually had a 25% greater ROI on the master plan community over a 12-year period than you would have gotten in just a standalone building. And for those of you who don't know, there's Emerald City there. You can see Fairview Shopping Mall in the bottom left-hand corner there. And there's 3 examples of this. So this one is Bayside. So this is Queens Quay East. If you look here, this is only a 6-year period. And I know the total's not there, but the increase in appreciation here is 45% more in this master plan versus the standalone buildings in the district. So unbelievable appreciation here. This is Bayside, in case you guys don't know what that is. It's basically the east side of Yonge along Queens Quay. It's that area that's been filled in over the last 6-7 years. And then finally, everybody knows City Place. So City Place has actually had a 57% ROI over, greater ROI, I should say, over an 11-year period. And so you can really see the power of multiple buildings coming into one area versus just putting a standalone building up. So this is City Place here. Moving into our second variable, which is proximity to mass transit. So Avis and Young did a study, and they studied basically buildings that were further from transit and buildings that were closer to transit within 500 meters. And what they found was over a 3-year period that buildings closer to transit appreciated 30% greater than buildings that were further away. And so when your clients are asking you, well, what variables do you look for, or should I be looking for in a great opportunity? It's master plan and it's transit. And you're going to perform and outperform the market better almost every single time. And this was an article that was in the Financial Post, by the way. So assembling your pitch. So how do you talk to clients about this stuff? When I worked for the marketing company in-house, this was basically my job, was to come up with why a development is sellable and why everybody should be excited about it. So you always want to have a superstar point. So what is the point or points that make this the greatest development in the history of all real estate developments? There's always a point like this on every single development. I'm going to show you guys in 3 actual examples. Then what I do is I start really broad. So I talk about the macroeconomic factors that are driving the market. That's things like immigration, anything on a countrywide basis that's driving the market. And then I start to zone in. So then I go GTA. I jump into supply issues. I jump into demand. I jump into inclusionary zoning. And I continue to go in there. I continue to go to neighborhood. This is where you're going to get into your master plan communities. This is your growth. This is your expansion, your area amenities. I go smaller again into the building. So, you know, what's being built? What are the amenities? What are the units? Things like that. Who the developer is. So it's become more and more important in today's market to work with a reputable builder. You want to ensure that, you know, what your clients are promised today is ultimately what's going to be delivered tomorrow. And then I jump into pricing and incentives. And so when I'm structuring one of these pitches, what I'm doing is I'm actually coming up with my superstar points at the end, because I want to lay out all these factors and all these variables first. And then after I do that, I have my pitch and I can go back through and look at, okay, what are the highlights of this specific development? And when you're doing this, you always want to put yourself in the mentality of a buyer. Think like a buyer. What would get a buyer excited when they saw? And as long as you're working from that mentality, you're going to be able to see those points stand out. And so this breakdown here is, you can do it for any specific site and you can always get the points. And the one thing to understand is when you're actually having a conversation with a client on the phone, you're obviously not going to be able to present exactly in this order every single time, because they're going to have questions for you, or they're going to, you know, throw you off or ask you something or say something that is out of order. But by presenting and packaging your presentation like this, you can always mentally figure out where you were and jump back as soon as you answer the question. So you're able to control the conversation. So how can you put this into play right now? 3 opportunities we're going to go through quickly. Lakeview DXC, which is in Mississauga along the waterfront. Park Place, which is in Vaughan, right at Vaughan Metropolitan Center. and Hometown Hillsdale, which is a really, really cool and unique detached site that's about 20 minutes northwest of Barrie. So Lakeview DXC, this I'm sure you guys have seen advertised before. The development highlights on this one, this is in Mississauga, Lakeview. So Dixie and Lakeshore, it's right on the northwest corner of Dixie and Lakeshore, one neighborhood over from Port Credit, which is consistently ranked one of the best neighborhoods in the GTA and consistently ranked the best neighborhood in Mississauga. So this is essentially an expansion point along the lake, along Lakeshore. The developers, Van Dyke, which we'll get more into in a second. Frozen here, hold on. There you go, all right, I do like that. 370 suites. There's two buildings here. There's an east and a west building. So the one building is 8 stories, the other building is 12 stories. Occupancy is about 4 years out from now. And in terms of incentives, you have the right to lease during occupancy, you have a reduced assignment fee, you have capped development charges, and there's a really nice deposit structure as well, which we're going to get you all the material on this after. So again, I broke this development down, and when I'm looking at it, what are the superstar features? So this is part of a 177-acre master planned community, which I'll show you guys an image of in a second. You have mass transit literally at your doorstep, outside your door. So it doesn't get better than this. The proximity to the waterfront, because you have the lake literally on the other side of Lakeshore. The price. This development is priced probably about $200 a square foot lower than what I think it should be. So the average price here is about $1,250 per square foot. I think that they could have brought this out at about $150, $200 a square foot more, and they would have been able to sell it. So this is a great opportunity for clients to get in who are looking for unbelievable bang for their buck. And the developer, so Van Dyke is the developer here. They've completed $1 billion worth of developments. They also have about $3 billion in the pipeline coming up. So this is a developer who's done this before, who's familiar with the process, who understands, you know, the costs and the risks and what's involved with developing real estate. So buying here, you can be assured that, again, it's what's promised is what's going to be delivered at the end of the day. Also on this one specifically, you have 50,000 square feet of amenities, and then every bedroom has a window. I know that might not sound like an unbelievable superstar feature, but you know, how many of you have walked into showings before on a 1-bedroom condo or a 2-bedroom condo, and you know, one of the bedrooms is interior and kind of tucked away into this like corner, and it's dark and it turns the client off right away. I mean, Kyle, I'm sure you've experienced it in your career so far.
Yeah, absolutely. Yeah, especially like the second bedroom, they put it in way in the corner. Exactly.
It's like an afterthought sort of thing. So this one, you're going to see all the bedrooms have windows here, which is really nice.
Nice.
So this is the master plan itself. So you can see Lakeview DXC just on the top corner there, on the north side of Lakeshore. That's Dixie, the road that's coming along to the right side of it. None of this, what's there, other than the treatment facility, is there. So you have Long Branch Station, which is literally at your doorstep. And then you have what's coming here is 8,000 new units, 20,000 new residents, 1.5 million square feet of employment space. There'll be about estimated 9,000 new jobs, 180,000 square feet of retail, 67 acres of waterfront lands, 27 acres of parkland. And so all of this total value is $4.6 billion. It's an unbelievable expansion to the area. And if you look and you predict what's going to happen in this neighborhood, it's almost going to end up like an extension of Port Credit, right? You're just going to have that like Lakeshore East community that runs from one side to the other. And Lakeview DXC is the first development in all this stuff happening. And so when this sells out and the next building comes out, it's going to be a bit more expensive. And the next one's going to come out, it's going to be a bit more expensive. And that cycle just repeats itself until like all those like little more expensives add up to an unbelievable profit 4 years down the road once this is ready. They're also implementing a new bus, like a rapid bus, that's going to be from your doorstep, from the Long Branch terminal down to Port Credit as well. So again, you have that transit expansion, you have the master plan community element, and you're right by the water. Remember, there's only limited space by the water and limited real estate by the water. Also, what's important to note here is the actual master plan on the south side of Lakeshore is actually slightly west of where Lakeview DXE is. So all of your south views are forever going to be protected. You're not going to get built up in front of. And the first thing that a lot of people say when they look at this diagram is GE Booth wastewater treatment facility. Who wants to live next to a wastewater treatment facility? This is like, it's been there for years. It's always going to be there. It doesn't smell. It doesn't make noise. Think of it as like protecting the land from future development, basically.
Yeah.
And then you have other park space. So, this is not a deterrent or shouldn't be a deterrent for clients. A lot of people live in this neighborhood now. And a lot of people are going to make unbelievable appreciation from all the developments that happen in this community.
Yeah, it looks like there's a lot of parkland around there and it's right by the water. This is going to be highly desirable, definitely. And then your clients are not just investing in the one building, they're investing in this entire community, like a master plan community where it's going to keep being built up with, like Mitch said, billions of dollars. And, you're getting it on the ground floor so that you can take advantage of all that appreciation of all the amenities and all the building and everything that's going on here. So it's pretty exciting.
Yeah, this is definitely one of the more exciting projects that we've worked on in a while.
Yeah, very nice.
So, and to put that, when I say 177 acres, like a lot of people are like, what does 177 acres actually look like? To put that into perspective, you have Concord City Place is 54 acres, Mobilio in Vaughan, 80 acres. You have Crosstown, Don Mills, and Eglinton at 70 acres. Brightwater, which is just west on the other side of Port Credit, 72 acres. And you have Square One, Mississauga, obviously by the mall, it's 130 acres. So this is significantly bigger than all of those, just to put it at scale. And here's some of the transit that's going into the area. So Lakeview DXC is just on the bottom there. You can see right below or right before Lakeshore. So you have the GO line. The pink line is like that rapid transit that's coming in there. You also have connectivity to obviously Union, and then from Union you can sprawl out all over the city, but great access transit wise. And then if you're driving, you obviously have Lakeshore, you obviously have the Queen, the QEW there, you have Dixie, you have Cawthra a little further down. So a very accessible neighborhood regardless of the mode of transport. Plus, you also have like stunning waterfront, right? So if you jump on a bicycle and want to ride around, then, really nice to look at.
Yeah, absolutely.
So this is an actual rendering of what the building will look like. You can see the building in the center there. Really cool that there's nothing really around the building. We talked about that. You can see that from the east side of the building, views of downtown Toronto. From the north side, you actually have protected views because there's 2 golf courses there. From the west side, you do have a small building that's set back, but you're viewing overlooking multi-million-dollar homes in Port Credit. And then south, you're going to have unbelievable views of the water. And as you can see from that diagram, they're really forever protected. So really nice views from all 4 sides of it. And if you're facing inside in the courtyard, between the 2 buildings, you have about 150 feet between the buildings. So it's not like you're staring right into your neighbor's unit. And it's a really lush, it's a green courtyard. So it looks really nice as well. And there's some really nice terraces in that collection too. So these are the 2 buildings. You can see a little bit about that green space in between there. So it's going to be a great addition to the neighborhood. And that's Lakeshore in the front there and Dixie on the right. Another view there. So the courtyard's actually raised up a couple levels. Again, those east views to Toronto, really nice. And, we talked about all the bedrooms having windows here. But what we also can talk about is that when you look at the floor plans, they're all very functional. They all make sense. They're like easy to figure out like how your furniture goes and where to position your furniture. And a lot of them have really nice balconies. The one on the right has a 100 square foot terrace. The one on the left, smaller balcony, but still a nice little outdoor space, but square, really functional plans. And these are easy for your clients to ultimately envision, positioning furniture if they're going to live in it themselves, or it being an attractive option for an investment because the tenants are going to be able to come in and do the same thing. Really nice amenities. We mentioned 50,000 square feet of them. This is the 7th floor outdoor common area. You also have, so this is one of the areas. You also have a bunch of lounge areas. There's a really nice fitness facility there. There is a golf simulator in there as well. So really, really nice. Some of them are in the east building. Some of them are in the west building. So anybody who buys has access to the entire thing. So that's one option. Park Place, we're going to jump right into option 2. I don't want to take any more of your time than we need to. This is a development that's coming to Vaughan, right near Vaughan Metropolitan Center. This one, just so you guys understand, is officially launching tomorrow. And when I say tomorrow, I mean May 4th, in case you're watching this tomorrow or the next day. So May 4th, it launches. Really excited about this one. This one is, as I mentioned, up in Vaughan. It's built by Smart Living. So think of Smart Center, think of the big REIT, so a multi-billion-dollar company, and Remington. So you have a great developer reputation behind this. It's 1,070 suites in total. It's 2 buildings. So there's a 48-story building and a 56-story building. They are launching the South Tower, which you'll see in the image in a second. So only one of them are launching right now. The occupancy for this one is 2027, so about 5 years from now. The incentives, as I mentioned, because it's only coming out tomorrow, we're going to learn all of those final details then. Now, superstar features, same thing as we did the last time, right? We went through and we broke this down. This is actually a 450-acre community. So the last one was 177. This is 450. So massive, massive community. You guys will see it in a second. I have a good diagram of how it all plays out. Again, you have that mass transit at your doorstep with the Vaughan Metropolitan Center and all the expansion they've done up there the last number of years. This is a higher end building, so it's going to have really nice luxury finishes. We haven't seen the interior renderings yet, but we're expecting it to be really, really nice. We were told that it is that high end look. And then you have the location. Vaughan's unbelievable. We've had incredible growth there. Before this, we actually sold Charisma, which is right tied to Vaughan Mills. And when we were looking through the statistics of the growth that's actually happened there, you have like 30% year-over-year growth in their real estate market there. You have unbelievable amenities in the neighborhood. You have access to highways and major roads. There's great restaurants in Vaughan. Like Vaughan's really become its own city. Like if you live in Vaughan now, you have no reason to go down to Toronto. Your whole world could literally be focused in Vaughan. So a lot of people are recognizing it. There's also a ton of growth in the small business sector there, in major companies opening up there as well, just because of the location. And so it's all growth that's going to continue into the neighborhood as well. I also view Smart Center as the developer being a really big strength here. I want to buy into a site that I'm familiar with who's putting it together, that they actually have the ability to pull through what they're promising. This is the actual master plan. So you can see in the bottom in red, that is Park Place. The south building is towards the bottom, right off the 7. That's the South Tower is going to be the first one that's going to be for sale. And then we have the North Tower, which will be coming at some point in the future. What you cannot see on this map is just to the left-hand side is the Highway 400. So you have 400 access within 5-minute drive of your doorstep. So unbelievable access there. You have Highway 7, which offers the Viva, so you can go east-west, and then 450 meters, literally 450 meters from your doorstep, you have the subway entrance. So unbelievable access to both highway public, whether it's Viva or whether it's the Go Transit, sorry, not Go Transit, the TTC, excuse me. And then north-south, if you're driving, you have Jane Street, you have the Highway 400, and then you have the Highway 7 to go east-west. So, you know, anybody who's been watching this area, it's unbelievable the transformation that's come in. If, you know, clients have bought in one of the earlier Transit City buildings, they've made unbelievable money. We sold Art Walk last year, which has done exceptionally well. There's a ton of green space in here. So they really did a good job of planning the community. You can see where you can get in and really live this like enhanced life.
Yeah, excellent. That TTC, that's already there, or that's being built, that's planned being built?
That's already there. So
Okay.
that's like running right now. Yeah.
Nice, nice. Okay.
And so this is the building. So you can see the north and the south building there. Again, they incorporate a lot of park space. So this picture would be shot north looking south. The base of the building. So they're going to be really, really nice additions to the streetscape. The architects have done a nice job. It's a good looking building. There's going to be retail down at the bottom of it. It's really community friendly, really pedestrian friendly area. And high end, again, like I mentioned, like they're going for that luxury vibe. And I think that when you look in the area at the other buildings that have come out, a lot of them have been, they're great investor suites because they're very cookie cutter and they've been affordable. But, you know, I remember when like TC4 and TC5 took occupancy, if I jumped onto the MLS, there was over 100 units available for rent for 1 bedrooms. So like, how do you differentiate yourself from that other than just lowering your price until you finally find someone to accept it, or accepting a tenant that's not so great, right? That no one else would want. So this type of building being higher end, it's going to stand out from those buildings, and it's going to ultimately yield you, if it's an investor, a better tenant and more money at the end of the day. And the better tenants generally stay longer. They take care of your suite more, you know, and they pay better money for the units. They're not a little less cash sensitive. So it's just a better experience.
Really good point there too.
What's
Really good
that?
point, like a really good point there, especially if you're an investor. Obviously, if you're going to live there yourself, you want the best location and everything. But if you're an investor, it might even be even more important to get the best locations and something that's a higher end building. And you're going to get them a much better tenant very, very quickly and easily. And they're going to have better employment, better income and all that kind of stuff. And it's going to be a lot less headaches for you and a way better return. So that's a really good point.
Exactly. Yeah, I agree. I mean, you know, when you've been in the industry long enough, you come to appreciate what how easy life is with a great tenant.
Oh yeah, yeah, for sure.
And so this keeps going. There we go. So this is an interior suite to give you an idea of what this looks like. So it will be really, really nice features and finishes. You'll be able to do cool things like that backsplash on the kitchen is like 1 slab as opposed to tile, 2-tone cabinetry, built-in appliances. We'll see tomorrow if those built-in appliances are standard or that's an upgrade. But really, really nice flooring options. And then, you know, the views here will be fantastic as well. So I'm very excited to see what the standard looks like on this one. We also have great amenities. So fitness center and all the facilities are going to be at the same level as the finishes of the units. So really, really nice, really high end as well. The third development, again, jumping right back into the third option, hometown Hillsdale. It's not often that we sell low rise, mostly because developers haven't used agents like us for the longest time. And if they do, they pay virtually no money for it. Whereas now, you know, there's a big need for these builders to use brokers like us in there. And so we're very selective of the low-rise sites that we choose. We looked at this one and selected it very specifically for a few reasons. So this one's in Hillsdale, Ontario. For those of you who don't know where that is, that's totally acceptable because I had no idea either. This is 20 minutes northwest of Barrie. It's developed by Zancor, Fernbrook, and Crystal Homes. So 3 unbelievable low-rise builders. These are probably 3 of the top builders in the country, on par with Mattamy, on par with Green Park, on par with Minto, all those guys. 124 lots in this specific phase. There's going to be more in the future, but right now it's 124. The frontages are 50, 60, and 100 feet. So the lot widths basically are 50, 60, and 100. And the lot sizes go from 50 by 120 all the way to a half acre, which is 100 by 200. Occupancy for this one is 2026. Then there's something a bit unique about that, which I'm going to get into in a second. And then they have the right to assign, an extended deposit structure, which they've just had. Originally, it was 15% in the first year. Now it's 15% in the first year and a half. And they've also capped the development charges. And there's a number of different, in pre-construction, we call them suites. In low rise, we call them elevations. They're essentially floor plans. So there's a number of different elevations or floor plans or house models to choose from. So we get into our superstar features again. You know, we don't deviate. We just do the same thing over and over again because it works. This one, the main selling feature, drive 30 minutes, save $1 million. It's an unbelievable proposition for clients. I've sold a bunch of them using basically this line alone. I'm going to show you in a few seconds where the actual value is. For your closing. So most low-rise sites, if you guys have or haven't sold low-rise before, they usually close in about a year and a half, 2 years max, because it just doesn't take that long to build a house. In this case, because it's a whole new community, they actually have to service all of the lots, and they're actually building a brand new water treatment and waste treatment facility plant off to the side of the site, and they're incorporating it all into the park space. The whole thing is going to be underground. It's going to be basically seamless. You're not even going to know it's there. But because they have to build this, it's going to be a 2-year build out for that. And then another 2 years to build the actual homes. And so where this becomes a really interesting proposition for your investor clients is the ability to buy low rise and get 4 years of market appreciation and the area to be built up as well. And so by the time this thing's built, there's going to be unbelievable value to be had there. Eagles Rest, which is a 15-minute drive just northwest of this site, so a bit further north. That was a site that was sold last year by Zancor and Fernbrook. Pricing there, if you bought last year versus what they're worth now, they're up. Some clients have made $400,000 to $500,000 profit in the period of a year. Yeah, so unbelievable opportunity, and I'm expecting it to just almost double in terms of what the profitability model is going to be for this site. I can see that people are going to make very good money here as well. In low rise, it's very important who you work with as a developer. In pre-construction, in condos, you write your deposit checks out to the developer's lawyer in trust. So, you know, there's like the big names like the Goldman Springs, like the Bradys, who hold the deposits on behalf of the developer until the project's finished. And only once they're finished and the mortgage is in place and things are registered, that's when the funds are released. In low rise, it's a little bit different. The developer actually holds the deposits directly. So who you work with becomes very, very important. Now, Terrion has a buyer protection on deposits, but it's only up to $100,000. So if you're buying, you know, in a lot of cases, the deposits are higher than $100,000. So you really need to make sure that you're working with a builder who has a reputation for, you know, delivering the product accurately, you know, a history in the market of building. And that great reputation is so important on the low rise side of it. And we have that here with Zancor, with Fernbrook and Crystal Homes. Pricing starts at only 1.6 million. And I know I say only 1.6 million, but the reason why I say that is we talked about this a little bit, the developer importance. So Zancor, Fernbrook, and Crystal Homes. The unique thing here is Crystal Homes is a very custom home builder. So if you haven't heard their name, it's because they do more custom homes than mass scale homes, which is great because when you buy on this site, you're actually able to customize the home much more than you would be with like a number of the other big builders. But the drive 30 minutes, save $1 million, which I want all of you guys to remember. If you take one thing away from hometown Hillsdale, it's drive 30 minutes, save $1 million. We pulled the price for the average 50-foot lot around the GTA. And look at these numbers for detached houses. Vaughan, 3.2 million. Richmond Hill, 3 million. Markham, 2.8 million. Aurora, 2.9 million. The list goes on and on. Even Brampton, if you want a single detached like this on a lot similar size, 2.7 million. So here you can get in for 1.6 million, so substantially cheaper. So that's why the whole premise is drive 30 minutes, save $1 million. And I think a lot of clients are going to value that, whether it's, buying a house that they're going to move into 4 years from now, or looking from an investment perspective and saying, wow, if all these other markets are this expensive, it's just going to keep going this way and it's going to keep sprawling out over time. Barrie, which is 20 minutes to the south of this, appreciated 36% last year alone. So we've seen tremendous growth there because of the demand, the increase to demand there. And that growth is going to just continue on and on and on. And I'm confident that like 1.6 is going to be 2 mil by the time this thing is built. And, all the other homes in the site are going to be worth significantly more than they are. So this is why when we looked at it and we figured out the sites to take on, we thought this was a really, really attractive opportunity. And we're seeing that with investors. They're very drawn to this. Even the ones who are normally drawn to condos are looking at this as a similar opportunity.
Yeah, and distance is not mattering as much anymore with the opportunity to work from home. People are only going into the office once or twice a week, maybe if at all. And so that's really helping out too.
Yeah, exactly. It's that whole balanced hybrid lifestyle now that I think everyone's adopted. So when we look at the actual community here, we can see the homes, 124 homes here. So there's the 50, 60, and 100-foot lots. Here, the blue is the 50, the orange is the 60, and then the pink are the 100-foot lots. So a lot to choose from, lots of green space. And if you've ever lived in a low-rise community, like a new one particularly, and you moved into an early phase, you'll know how much construction of a construction zone you live in for years afterwards, as everything else is built around you. With this, the way they're actually doing it is this is the front of the site and all the future development is going essentially behind. So there's a little bit to the west, which you can see here, but most of it is to the north of it, meaning that this community is not going to sit in a construction zone over time. Once it's finished, they move on. You get a nice finished community, lots of green space. There's a little water area there. There's an elementary school coming to the neighborhood. There's a bunch of other amenities that are coming by as well. So, if you're looking for space, you're looking for investment opportunity for your clients, this is a really good one to get into.
Perfect.
So, and we can see here some of the elevations of the homes. So really, really nice. And then because Crystal Homes is part of this, you have the ability to actually customize the home quite a bit. The last deal that I just did, the person bought a 50-foot front, and one of the upgrades they're planning on doing is putting 11-foot ceilings on the main level. So you can imagine the grandeur when you walk in and you see these big high ceilings and huge windows. So this sort of sums it up. We have 3 really, really good opportunities here: Lakeview DXC, we have Park Place in Vaughan, and then we have hometown Hillsdale, which is north of Barrie as well. So, and this is really just the start of this. When Kyle and I connected, it was what opportunities do you have now? But it's also how can we work together in the future, right? I think that's an important factor for you, Kyle.
Absolutely, yeah. We should. My goal is to have a partnership where we can work together on all kinds of new projects and give our agents, especially, the head start on getting access to all this kind of stuff for their clients.
Yeah, and you know what? Anybody watching this, you're really lucky to have a broker like Kyle who's looking out for you guys, who's working to build opportunities and build these relationships. Because at the end of the day, more access for you is just more chances of being successful and having a sale. So this is something I feel like you guys should definitely take advantage of. I know that the senior staff at My Condo Source, we're really excited about this partnership, and we hope that there's many, many deals to come. And, this is only 3. We have a number of other sites going forward. Last year, I think we promoted like 54 different sites. So we have constant opportunity where we'll be able to feed you guys, different sites and access to different ones as well. In terms of next steps, so I was told in this email, you guys are going to receive a link to this Zoom, but you're also going to receive a link to all the marketing material that we're going to put together for you. So we'll have some Google Drives with all the marketing material there.
Yeah, price lists and price list, floor plans, all that kind of stuff, right?
Yeah, price list, floor plans, incentives, renderings, logos. If you guys want to put marketing stuff together, maybe that can be a conversation for another chat, possibly, is like how to market this stuff well.
Yeah.
So I would go through, download the material, start contacting clients based on the knowledge that you guys gained from this one. Every time you get new information, it's like the perfect chance to reach out to clients, right? It's like people are reading the headlines, they're getting advice from people. If you just give them a call and say, hey, I don't know if you know this, but there has actually been some new changes in the government fiscal policy that's going to affect the real estate market. You may or may not have seen that, or I'm sure interest rates have gone up. I just wanted to give you guys a little bit of insight into what I think that's going to do in terms of the overall market. As agents, we know more than 99% of the population out there. And most people are getting their news from like Toronto Life or Blog TO or like a newspaper. And so, they don't go beyond 1 or 2 articles. And if they happen to read the wrong articles, they're going to be misinformed of the market and ultimately miss out on potential opportunities. So I would use this as a chance to say, hey, like, there's a number of things that you're reading about that, yeah, they're pulling the market back, but there's also a number of pushing variables that are really driving prices forward, and show them why Toronto is still cheap. And oh, by the way, as soon as you realize the market's cheap, I have 3 really good opportunities at the moment now, and then you can transition right into that. And I do with my clients. It's very successful. It's a very good way to do it. And it's a very organic way. Your goal is just to educate clients at the end of the day and provide them with opportunity. There's not even like a hard sell involved in it.
100%. Yeah, you're just giving them information, and you should be keeping in touch with your clients like minimum 12 times a year. So once a month, you want to at least give them a call and give something of value. So find some more information, or one of these projects, we should have stuff like basically, that many times per year, there might be something new coming up. So give them a call or an email, and at least 12 contacts per year with your good clients.
Yeah. And if you haven't been doing that, which I know a lot of realtors don't, this is your opportunity to get started with it.
Exactly. Yeah.
So here's the thing. Kyle and I talked about this, and one of the things we decided was we're not just going to provide you this information and then sort of just let you guys drown in it and not do anything with it.
Mm-hmm.
So we're going to support you along the way. I'm very hands-on with clients and with agents that we work with. So if you do speak to a client and they are interested, I'm happy to set up a Zoom with yourself and with your clients, and we can go over the development specifically. We can talk about market opportunities, and we can just get them really excited about, the overall pre-construction landscape. So we're not just going to let you flounder. We really want to be involved, and your success is ultimately our success at the end of the day. So our goal is to do it all together.
Absolutely. And that's a huge value, to have Mitch help you with that, and help you sell your client, and bring them along the process with you. That's invaluable.
Yeah. And then what we can do is from there, we can set up private appointments at experience centers. We can get worksheets done together. It's really going to depend on clients at that point. If you speak to a client today and they're like, I have somebody who loves Lakeview DXC, I'm ready to go, just call me or email me, and and then we can lock up a unit for them right away. Or Park Place will be a couple days from now, but we can do that as well. And then Hometown Hillsdale, we can find that as well. And if they're like, listen, do you have anything else in Mississauga? We do, because we have Access coming out, which is the Exchange District Tower. We have M5, which we're cleaning up right now. So generally, if you have clients looking in specific areas, we probably have a site that works. I would just say, like, let's get through the process. Let's get the clients educated, and then we can take the next step with them.
Right, right. And I'll have all of Mitch's contact info in the email that goes out. And, you guys can contact me anytime, my Kyle at internationalrealtyfirm.com, and you can put everybody in touch. And like I said in the email, we're going to have all that information for you.
Yeah. And so, I mean, first of all, listen, Kyle, a massive thank you for allowing me to do this today. I think it's fantastic that what you're doing for your agents.
Absolutely. Thank you. And then you're going to help them through the process. And this is what some of them need. They want to get into this type of business, doing pre-construction. So yeah, thank you for your help as well.
Amazing. No worries. So yeah, I look forward to helping everybody, and we'll go from there.
Sounds great. Thanks a lot, Mitch. And thanks everyone. And we'll be in touch very soon. Take care.
Take care.